Hey everyone, welcome back to Corporate Dakota, the place where we uncover the hidden stories behind those piles of corporate paperwork. Today we have a special treat, a peek behind the curtain of a company that's all about sushi and a recent shareholder meeting that tells us a lot. So what exactly is this document? It is basically a company reporting important events that shareholders should know about right away. Think of it as the company's public diary for significant happenings. We're diving into the latest filing from Kura Sushi USA, Incorporated, a company many of us know for its conveyor belt sushi restaurants. This particular report details a shareholder meeting held on the 21st of January 2026. Now, this isn't just about saying hello to shareholders. This meeting is where the big decisions get made and where ownership really gets to flex its muscles. We saw three key proposals put to a vote. First up, quorum check. It's like making sure enough people showed up to have a proper party. And boy did they show up, almost 93% of the voting power was there. That is a really strong turnout, which means the decisions made have solid backing. For those keeping track of shares Class A and Class B stocks, were the players here, Class B shares carrying 10 times the voting power of Class A shares. This class structure is pretty common and can give certain long-term investors more say. The first order of business was electing the board of directors. These are the folks who steer the ship. 5 nominees were up for election, including familiar names like Shintaro Asako Tressa Bowers, Claudia Schaffer, Karen L. Stutz, and Hajime Uba. Their job is to make sure the company stays on course for the next year until the next annual meeting. Looking at the results for director elections, each of the 5 nominees received a resounding endorsement. The numbers are pretty clear here. A vast majority voted in favor of each candidate. For Shintaro Asako, 17.2 million votes were cast for him against only 1.6 million. That is a landslide, not even a close race. The other nominees saw similar levels of support. Claudia Schaffer, for instance, received an overwhelming 18.8 million votes for. This indicates strong confidence in the current leadership and their vision for the company. Next up is something that sounds super technical, but is actually super important. They voted to approve the accounting firm, KPMG LLP. Think of them as the official scorekeepers and auditors of the company's finances. They make sure everything adds up and that the company is playing by the financial rules. The shareholders overwhelmingly approved keeping KPMG LLP on board. With almost 19.6 million votes in favour, and only about 12,800 against this, is a clear signal of trust in KPMG's ability to oversee the company's financial reporting for the fiscal year, ending the 31st of August 2026. It's important for investors to have confidence in the independent auditors. Finally, we get to a topic everyone is always curious about: the pay for the top executives. This proposal is an advisory vote on executive compensation. It means shareholders get to voice their opinion on how much the top brass is paid, but the board ultimately makes the final decision. And the shareholders seem to be generally happy with the compensation packages. The results show a significant majority in favor of the executive pay. 18.5 million votes were cast in favor of the compensation package, against just over 265,000. While it is an advisory vote, this strong approval suggests the shareholders feel the executive team is being rewarded fairly for their work, or at least they are not actively objecting to the current pay structure. Now, for a little bonus news, the company also put out a press release on the 22nd of January about a new director joining the board, Claudia Schaffer. This is interesting because she was just elected at the shareholder meeting and now they are highlighting it. It shows they are keen to promote her arrival and the potential fresh perspective she brings. This press release is essentially their way of announcing the news to the wider public beyond just the shareholders who attended the meeting. It is a standard practice to ensure transparency and to keep the market informed about significant leadership changes. This press release is filed as an exhibit to this report, meaning it is considered part of the official filing and provides the details of Claudia Schaffer's appointment. And finally, on the signatures page, we see the report is signed by Jeffrey Utz, the Chief Financial Officer of Kura Sushi USA Incorporated. This tells us the CFO is officially attesting to the accuracy of the information contained in this report. So what is the big picture here? Kura Sushi USA Incorporated seems to be in a stable place regarding its governance and its relationship with its shareholders. The strong turnout at the annual meeting shows an engaged shareholder base. The smooth election of directors and the ratification of the auditor suggest confidence in the current management and their oversight. The advisory approval of executive compensation also points to general shareholder satisfaction with how the company is being run at the highest levels. The election of Claudia Schaffer as a new director is perhaps the most dynamic piece of news here. Companies bring in new directors to gain new perspectives, challenge existing strategies, and potentially bring in specialized expertise. Her arrival could signal new directions or a renewed focus on particular areas of the business. Without knowing her specific background from this filing, it's hard to say exactly what impact she will have, but it's always a positive sign when a company refreshes its board. Looking at the numbers from the voting, it is clear that the majority of shareholders are content with the status quo. There is no significant dissent seen on any of the proposals. For a company like Kura Sushi USA Incorporated, which operates in a competitive restaurant market, this stability is a good foundation. However, the real test will be how this leadership team and their strategies translate into growth and profitability in the coming quarters. Potential risks for a company like this could include shifts in consumer dining habits, economic downturns, and intense competition within the casual dining and sushi restaurant sectors. On the opportunity side, expanding into new markets or innovating their menu and dining experience could drive future success. Ultimately, Kura Sushi USA Incorporated appears to be navigating its corporate governance tasks effectively. The company is demonstrating a commitment to transparency and shareholder involvement. The upcoming year will be key to seeing if the current board and leadership can capitalize on opportunities and effectively manage any emerging challenges. Alright, that is our breakdown of Kura Sushi USA Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.